Okay, let me start off with what happened with my first investments. So here it is, it's around 1999, 2000. Everybody thinks they're a tech genius. You put money in any stock, it goes up 26% the next day. So what do? I take my college scholarship money and I put some of it in the stock market, thinking, this is easy
Guaranteed
money.
20%.
Yeah, guarantee. And every day it's going up and down, but mostly up.
Was there massive euphoria? I wasn't focused on this at all at this time.
Yes, everybody was, everybody believed they're a genius. So in a bull market, everybody believes they're a genius. And they all say the same phrase. This time it's different.
So funny.
It's such a funny phrase that in the investment world, people make fun of it. They're mocked because it's never different. It's actually the same thing. Bubbles expand, but over time, they mathematically cannot continue. So here we have people making millions of dollars who would otherwise be working in a parking garage, and they are giving stock tips out and telling everybody, you gotta get into this, JDSU, this, all kinds of stuff. So I take my college scholarship money, put it in the market, and I very quickly lose half the money.
Because of the crash?
Yeah, because of the crash. And so what happens is I realize, oh my God, I'm not as smart as I thought. It's not easy to become a millionaire through investing in 2 weeks. And so here is where there was a pivotal moment. One, I could have doubled down and said, I just picked the wrong stock. Let me pick another stock. This is very similar to what you hear with people in the crypto world. Well, my investment, quote, investment dropped 50%, but I got to do this coin or that coin, et cetera. What I chose to do is go a different route and say, you know what? I don't think I'm that smart about investing. And I actually want to learn how fundamental basic investing works. So things like low cost, long term, things like reading about John Bogle's philosophy, et cetera. And I started to learn about it. And I realized you could spend your entire life trying to trade, but traders hardly ever make money over the long term.
And if we were going to define trade, timing the market.
Yeah, it's like...
I understand this stock.
Yeah.
It's undervalued.
Yeah.
I'm going to buy because I know it's going back
And I'm going to do it short term, right? So I'm going to create this narrative that, ooh, this stock, look at the trading, look at the chart, and I'm going to try to make quick money in 4 weeks. Everybody now knows somebody who trades. Those people almost all lose money. You'll notice they're your best friend when they're making tons of money. Hey, bro, I made 600% in this stock. When it goes down, you don't really hear from them, okay? That's called survivorship bias. Those people simply disappear, but they're really loud when they're making money. And you learn that mathematically, even top Wall Street investors, over 80% of them don't even beat the market. What does that mean? It means that you watching this show right now can pick a simple Vanguard fund and you can beat over 80% of these fancy Wall Street suits. These guys were paid over $1 million a year. This stuff is really hard to believe. It's really hard to believe because it's counterintuitive, like 1% fees can be 28% out the door. People